Well, I think, Nigel, we have the management of Shree Cements with us.
Well, let's get straight to it. We have Mr. Neeraj Akhoury, the Managing Director of Shree Cement, who joins us on the show. Hi, Mr. Akhoury, and good to speak to you after a while. Well, the past quarter was more or less in line, but the street wants more. So let's find out what's the way ahead from here on. Now, in the past quarter, clearly you're focused more on value rather than volumes. What is the strategy from here on? At the half-year mark, it appears volumes are more or less in line. It's flattish in the first half of the year. Earlier, you all were guiding for 8 to 10%. So for the year, what will the volume number look like? And also on the EBITDA per ton front, what is it likely to be from here on? Given that you'll get some benefit of lower cost, volumes will spike up, as well as pricing should be stable. Please go ahead, sir, both these parameters.
Good morning, Nigel. You are right. Last 6 months, the demand has not worked out in the way we were expecting. The country demand has been more flattish, and therefore in the last quarter we had very deliberately looked at of managing our revenues, managing our costs better. Going forward, Nigel, I am very convinced that the demand pickup should happen. The quarter 3 and quarter 4 demand for the year should be in line with our expectations. Already we are seeing some green shoots, and therefore we'll be back to our strategy of driving both volume and value in the coming quarters. Next year, of course, some of our new capacities will be coming online, and there we do expect that our growth should be in double digits.
Double digits in FY26, but what about FY25? What should you go at?
We expect the remaining 2 quarters to grow at about 8 to 9%. I am still very convinced, Nigel, that in cement there is nothing called destroyed demand. It is only a delayed demand. And if this works out, this is true, then quarter 3, quarter 4, we should be back on 8 to 9% demand growth. And if that happens, we will be growing in line with the market.
Okay, all right. So for the year, then I think it should be ballpark between 5 to around 6% growth for Shree Cement on volumes.
5% is what I would be expecting, yeah. 5% demand volume growth, yeah.
Got it. On the value terms, you've done a fair bit of work because the premium sales as a percent of your trade mix, it's moved to 15%. I didn't think in the previous quarter it was close to around 10%. So you're focusing on pricing as well. What does it mean in terms of an EBITDA per ton? The average for the first half of the year should be in that vicinity of around 850 rupees per ton. Second half of the year, how much better can it be?
So Nigel, EBITDA is a function of both prices and the cost. We are working rigorously on managing our cost lines. Last quarter itself, we have been able to reduce our cost by about 8% on YOY basis. These efforts will continue even in the coming quarters and coming year. So what we see is we will be doing a little better on cost. Also, thanks to the tailwinds from fuel prices moderation across the globe. On pricing, it is a difficult judgment. We would not like to make any estimate. It will all depend on how the prices pan out. But looking at the fact that we are expecting a better volume environment, I believe pricing should also play out, and we should expect better than last quarter pricing in the next 2 quarters.
Cost per ton will be lower even in quarter 3 in comparison to quarter 2?
No, I would say that quarter 3 prices will be better than versus quarter 2.
Cost. Pricing will be better, but your cost per ton.
Lower. We are working on this, that cost should be lower than what we expected what we saw in quarter 2.
So fair to say that a rough EBITDA per ton, since pricing will be higher, cost will be lower, volumes will pick up, and you know what I'm going to ask you next? EBITDA per ton should be closer to around 1,000 rupees per ton, sir?
So, Nigel, as I said, it will be wrong on my side to give you an EBITDA estimate, but looking at the overall set of growth of volumes, our constant work on the cost side, I expect the EBITDA to be better than what we have seen in last quarter.
All right. Mr. Akhoury, you've been a veteran of the industry. You've been on the opposite side as well with some of the peer group. Do you think Shree Cement has missed a trick in the book by not doing inorganic growth? We have a couple of those assets, Kesoram, India Cements, Penna, Orient Cement, all of them have folded up in the competitors. You're still focusing on organic growth. Do you think you've missed a trick in the book?
Nigel, we are very convinced about our organic growth story. I think building a plant at $75 a ton is a better way to grow than buying at a very high price. This has been, at the same time, when we build to our designs, to our specifications. So, and therefore the cost of running those plants is also lower. I would say I am very convinced that our organic growth story has a lot of meat in it, and this is what we should be doing in future as well. Having said that, Nigel, please be aware that we are not against any acquisition opportunity. Whenever such opportunities come in the market, we do study them, and if it will meet our expectations, we'll be very happy to participate.
But Mr. Akhoury, it's not converting. Studies is not converting into the final exam, because you all evaluate various plans, and I have my ear to the ground as well. Currently as well, you're looking at a couple of units, but it doesn't get into the deal closer stage. So as you said, you're building at around $75 per ton. If you're doing inorganic growth, what would be the valuation that you'll be willing to buy an asset? Some of these deals have closed at around $100, $110 per ton.
It's just not about valuation. It's also about strategic fit. It's also about the quality of plants. It's also about what is that we bring on the table if we make that acquisition. So it's a more detailed study, Nigel, and the capex cost per ton is just one part of it. Yeah. As I said, if it meets our requirement, our expectations, we'll be very interested to go for it. But currently is organic, which we are focusing on, and I think so far it has worked out well for the company.
Mr. Bangur, the investor, actually has done well because Orient Cement, I think, he had a small stake of there, 1.5%, and I think he's made close to 2.5 times to 3 times that investment. So good on him. Mr. Bangur, the investor, has done well, but I think Shree Cement on the aggression front in inorganic growth, they have been lacking. Final question. There was an income tax survey that was carried out. Have you heard back from the income tax authorities? By when do you expect some kind of closure on this front?
No, currently some of those claims are sub judice, so it will not be right for me to comment, Nigel. We do believe that we have done the right things, and that the law will prevail. Yeah.
Mr. Akhoury, it's been good speaking to you when you were on the opposite side. In other cement companies as well. Thanks a lot for joining in, giving us your analysis of how you see industry as well as Shree Cement's futures. Thanks a lot for joining in.
Thank you.
All right.